high yields, massive dividends, super cash flow. That is the topic of the video today. I am so focused on high yields these days. And if you watched my last video, you'll recall I went through a lot of investment vehicles that offer just incredibly high yields all the way up to 12%. I covered some exchange-traded funds, I covered some stablecoins, and I even covered some dividend stocks. I received feedback from the community. I want to continue the trend in the video today. I have some other investment vehicles that offer high yields all the way from 4% up to over 8%. I want to review these in the video today because I'll tell you right now the stock market, it's at all-time highs. As a dividend stock investor with a really well-rounded and diverse dividend stock portfolio, I will tell you, there aren't too many stocks right now that are on sale. They are all very richly valued. So I'm really focused these days on building up my cash position and waiting for the next huge buying opportunity. That being said, I don't want my cash just sitting in fiat currency. I really don't want that because the value of the US dollar, the value of cash, it is eroding now every single day. Inflation is really coming around. The price of everything is going up. And so cash, in my opinion, right now is trash. And so I want to share some alternatives to cash in the video today that earn all the way from 4% yields up to 8+%. And these are relatively stable and cash-like proxies, if you will. And at the end of the video today, I'm really excited because I want to cover some cash management strategies and how I'm looking at my cash portfolio these days and structuring it in many ways for passive income, for cash flow, just like my dividend stock portfolio. So I have a really exciting video for all of you today. Get ready, everyone, for today's dividend investing video. Welcome to PPC Ian. This is dividend stock investing for everyone. All right, everyone. So first I want to get into a little theory behind why I am so focused on cash management right now and high yields. And then I'm going to get into the actual investment vehicles, the ETFs that I want to cover in great detail today. So check it out on the screen right now. And so as I mentioned, cash really now is trash. The value of cash is eroding away. And so for me right now, I am looking for cash flow strategies, high yielding options that can earn cash flow on my cash, not only to maintain the purchasing power of my cash, but hopefully to also add some extra value above and beyond the rate of inflation. Now, as I mentioned, the stock market is trading at all-time highs, and so these bond-like proxy vehicles can be much safer alternatives while I'm waiting for the next market buying opportunity. Now, there are exceptions out there. There are stocks that I'm buying that I cover here on my YouTube channel, also on my Twitter. But that being said, I'm trying really now to build more of a cash position. I would also say it's probably a function of where I'm at in life. I'm at a point in life where having a bit more cash wouldn't hurt. Also, who doesn't love massive cash flow? And so the vehicles I'm going to present in the video today, they offer massive cash flow, and it's so exciting to see that cash flow showing up in the bank account, in the brokerage account. And what I'll tell you is the vehicles I'm sharing today, they pay out their dividend distributions monthly. So who doesn't love a predictable stream of monthly cash flow that can just be used to bolster someone's savings or even pay for bills? And so check it out on the screen right now. What I want to also say is these types of investments that I'm sharing today, because they pay such huge high distributions, not only are they really motivating to see that cash flow come through, but they can quickly cancel out bills. So for example, you might have your internet bill each month. one goal of many cash flow dividend investors is just to cancel out bills one by one. Let's see how we can save money, invest in dividend stocks or in ETFs to drive huge cash flow that can just cancel out the bills, never pay for an internet bill for the rest of your life kind of thing. How nice is that? And I will say these investments I share today, they're really great for investors who need to pay bills right now. And that's probably most of us, myself included. And also, I would say what's so exciting is the strategies today are really good for a stock market that is trading at all-time highs. The strategies today, they're really good because the market, when it tanks, I do believe that these strategies will continue to mostly trade sideways. Sure, they may present some dips, some buying opportunities, but over long periods of time, these are more sideways trading investments that just spin off massive cash flow. And so without further ado, I want to go forth into the actual investments today. And before we get started, though, by the way, please go ahead and smash that like button if you enjoy massive cash flow as much as I do. If you love cash flow, you love these types of investments on a monthly basis, please smash the like button and don't forget to subscribe. I have new content here on my YouTube channel really coming all the time. You do not want to miss out. I have so much value on the way. Check it out on the screen right now. And so all of the investments I'm sharing today, these come from subscribers. So after my last video, which I will link to in the description below, people loved it so much and they started writing in their comments, and I love that. And so one of my subscribers was saying, last time, Ian, you covered XYLD. XYLD is a Global X S&P 500 covered call ETF. It yields 9.2%. Out of all of these kind of cash management strategies, the Global X S&P 500 covered call ETF, that honestly is one of my favorites. And you'll see when I construct my sample portfolios later, I'm looking at that one really closely for my own cash management strategy. That being said, the subscriber said, Ian, but why don't you look at XYLG? So XYLG, it's similar to XYLD, but the difference is this one offers some capital appreciation, some growth. You may recall from my last video on XYLD, that one, it really offers a huge dividend yield, 9% dividend yield, but the stock chart is sideways. But as you can see on the screen right now with XYLG, the stock chart on the bottom is up and to the right. Now, worth mentioning, this ETF, Exchange Traded Fund, it has only been trading since it appears late 2020. And so it's basically been trading in a very strong bull market, this kind of pandemic recovery market. And so obviously, we don't know how this ETF will perform in down markets. I do know with XYLD because I had a lot of data on that and it's performed really well throughout the years. It's basically traded sideways. It has not lost value, but we just don't know what will happen with this one. But the difference here with XYLG, it's also from Global X. It's trading at $29.78. The distribution yield right now is 4.86%, although I am forecasting that forward because it's only paid 8 monthly distributions so far. So 4 of them I had to basically estimate based on the average. But anyway, I come out with a estimated distribution yield of about 4.86%, and that's not bad. Now, I'll say the expense ratio is pretty similar to the other ones, 0.6%. What I would say is a little concerning about this is the net asset value of this ETF is only $3 million. That's almost nothing. So there's not a lot of liquidity. There's not a lot of this ETF trading on a day-to-day basis. And so hopefully, over the years, this one will gain in popularity. It's really new, but that is something that I keep an eye on. Now, anyway, what I would say is the strategy is very similar to XYLD, but the difference is they only write the covered calls on half the portfolio. So this is an S&P 500 portfolio. And the reason it's growing there, you're seeing some capital appreciation, is because they're not writing covered calls on 100% of the portfolio. They're writing covered calls on 50% of the portfolio. So it is a covered call fund. That's how it's generating yield that is far superior to the typical yield of the S&P 500, but they're also participating in upside. And so it's a little bit of both. It's a blended type portfolio. Now, what's so interesting here that I would say is, I have a thought exercise. On the lower right-hand side of the screen, you may recall last time I also covered XYLD. XYLD is also from Global X, and that is the ETF yielding 12%. But you may remember, I didn't really like that one as much. I didn't like it because, yeah, the ETF is yielding 12%, but over long periods of time, the equity, the net asset value of each unit, it's going down steadily, not in the last 5 years, but really over longer periods of time. And some subscribers actually wrote in and said they actually changed their algorithm, they fixed it, and so now it's not going to lose more value. I hope you all are right. But for me, when I look at XYLD over long periods of time, the 12% yield, it's just not worth it to me because I'm concerned that the underlying value may erode. That being said, I have a little bit of a hack here for people who are nervous about eroding value like myself. As you can see on the screen right now, this is an introduction to what I'm talking about with cash management. So what you can do is, well, why not look at both? Do XYLD, which is yielding the huge 12%, and weight it at 75% of a cash portfolio. Then XYLG, which is only yielding 4.86%, weight it at 1/4 of the portfolio. What is the average yield of that portfolio blended? As you can see on the lower right-hand side of the screen, it's 10.31%. So theoretically, I believe this thought exercise builds a portfolio where it mitigates any downside risk from XYLD, unless the market just tanks. Because look, if the market tanks and we're in a steady decline on the S&P 500, certainly that will hit XYLG. I'm just saying, though, in a market that's kind of like it has been, it's sideways, if not trending up over long periods of time. If XYLD continues to lose a little value over the long run, I'm just saying I think XYLG will make it up, as we see in the stock chart right here. And so you kind of weight that one at 25% and XYLD at 75%, you get to a blended of 10.31. Now, why this is so exciting is this blended strategy. It actually beats my beloved XYLD, which is the S&P 500 fund from Global X that does 100% covered calls that's yielding 9.2%. So I've got 10.3 here instead of 9.2. And I think what I'm doing here on a blended basis de-risks XYLD. Now, of course, what I would say with this thought exercise is there's more funds, more complexity, more tax work. That being said, overall, the reason I'm presenting these kind of thought exercises is, look, this is thug life investing here on this channel. This is ordinary people, more or less, all around the world coming together to talk about cash flow, to talk about dividends. And sometimes, as kind of a thug life investor, I think a lot of us, myself included, we get really scrappy and we get really creative. But sometimes it makes sense for us to take a step back and think like investment professionals. And so investment professionals, especially at large companies that have large amounts of cash, they're not just thinking, hey, do I go with XYLD or XYLD or XYLG? They're thinking, no, overall, how can I purposely allocate these different ETFs at the precise right amounts to get the best return? And that's what I'm trying to say with this thought exercise. And so as you can see on the screen right now, I want to quickly go through some pros and cons, and then I'm going to move on to the next investment. And so in terms of pros, there's immediate income with this type of fund, monthly dividends, steadily growing value, and it could be a great hedge against something like XYLD. Now, in terms of cons, it has a lower yield, much lower. It could complicate taxes just because it's another ETF. boy, is it a small fund and illiquid in many ways at only 3 million net asset value. And so that concerns me a little bit, but I'm sure it will grow over time. Now, I don't know how it will perform in a strong down market just because it is a new fund. Time will tell. And so one note that I write here is an alternative to this one could be an ETF called DIVO. This one looks very similar in nature to the XYLG. I did not cover it, but this is one that the community wrote in about. And so I want to keep moving. I got another ETF from the community for this idea of massive monthly dividend cash flow right now. Cash management, if you will. Not a lot of risk, but a lot of dividends. And so I want to keep going. And this one is really exciting. Check it out on the screen right now. I really like this one. It's called JEPI or JP Morgan Equity Premium Income ETF. This one is trading at $59.79. It has trailing 12-month distributions of $4.95, although I only could find 11 months of data because this, again, is another newer fund. Honestly, that's one of the reasons I like XYLD so much, the one I covered in the last video, and honestly, QYLD to an extent, because they have more history, more data. But anyways, this one has been around 11 months, so I estimated the 12th month in my analysis that it would be a very similar yield to the other months. So I averaged them out. 8.28% distribution yield. Nice. And so this one has net assets of $1 billion. And so nice work, JP Morgan, getting a lot of people into this fund, looking at this fund. And so I like that. And the expense ratio is low at 0.35%, so looking better than the funds from the Global X family. Now, what's interesting about the JP Morgan one, as you can see on the bottom, is like the last one that I looked at, XYLG, not only is this a dividend-oriented ETF, but it is offering some capital appreciation. So how do they do that? As you can see on the right-hand side of the screen, their strategy is focusing on the S&P 500. They try to focus on S&P 500 stocks, but they're actually actively managing the portfolio. So they're picking and choosing stocks that they believe will have less volatility, less downside risk. Their strategy includes a goal of having more income and having the majority of the S&P 500 returns. But what they are doing is writing covered calls. And so in many ways, this one is different than anything I've reviewed so far. So the ones I've reviewed so far, especially from Global X, they're passive portfolios, more or less, that are following algorithmic decisions. I know that they have portfolio managers that are making complex decisions, but it's not, I would say, very active in stock picking, whereas with this particular ETF, the JEPI, they are actually actively managing it, and they're actively managing which stocks are in the portfolio. Now, they are S&P 500 focused, and they're writing covered calls. And so what's so interesting about this one is you're getting that upside, and you're getting a massive distribution yield. Now, obviously, in a down market, we shall see how it performs. I do think this is one that could see a little more volatility in a down market than a XYLD, for example. And so I want to go into the taxes really quickly. As you can see on the right-hand side of the screen, I found some really good information from JP Morgan's website, and it says it distributes all income from dividends and options premiums, which are treated as coupons rather than gains, so that capital isn't returned to shareholders. And so what's so interesting is when I was looking at the Global X funds, I mentioned this in my last video, the income that comes through from Global X, it kind of came through in a few ways. It would come in as short-term cap gains, long-term cap gains, and return of capital. Return of capital can get a little bit complex because you need to do some bookkeeping, and when capital is returned, it lowers the investor's cost basis. So if the investor ever sells, that lower cost basis gets recaptured on the delta between the sale price and the buy price. The buy price less the return of capital. And so what's interesting here with JP Morgan is they're saying the way they run this fund is it's a little less complex on taxes because it's not getting treated as return of capital. Now, the distributions that come through, my understanding is they're still ordinary income. It's still short-term cap gains, ordinary income style income that's coming through. So let's keep going. Check it out on the screen right now. Just a few more things. I'd like to say that the pros, as with anything I'm mentioning today, is immediate income. What I love with this one, though, is it has some steadily growing value. I think, again, this could be a hedge against XYLD. Maybe it makes sense to own XYLD and this one. I love that the structure involves no return of capital per the literature on the fund's website. In terms of cons, I'm honestly not seeing a lot of cons. This was a very interesting one. I like this one. I would say the one con, though, is the dividends are ordinary income, to my knowledge, and obviously that's the same with all of the instruments I've described so far today. And I just don't know. It's so new. I guess that's a con. I don't know. How the heck will this thing perform in a down market? We just don't know. But the next one I want to cover, we know how it's going to perform in a down market because it has been around a little bit longer and it's worked really well. And this one is even more interesting because it provides some downside protection, which I think is really important in a cash management strategy portfolio. So check it out on the screen right now. Another one that came in from subscribers, this one yields 7.89 massive percent. Man, is that better than letting cash sit around. This is Nationwide Risk Managed Income ETF, or NUSI, NUSI, and it's trading at $26.91. And in terms of trailing 12 months distributions, $2.12, so 7.89% yield. Net assets here is $292 million, so a little bit better. And this is the fund family of Nationwide. And so what I would say here, look at the chart. This one's been around since 2019. We've obviously had some volatility since then. And you can see in general, yeah, it's had some periods where the fund has fallen in share price. But in general, it has done really well and it's traded within a range. And so I like that, if not steadily, slightly increasing in value. But I would say more or less this is sideways trading. Now, what I like about this is it's a NASDAQ-focused one, like XYLD that I covered in the last video. They own the NASDAQ 100. They write covered calls. But what is different here and why the yield is not 12% like XYLD is they also purchase downside put protection. And so they use a rules-based approach and they buy... So they own the NASDAQ 100. They write covered calls. That generates income. But they also buy puts. And the reason they do that is if the market flat out tanks, something like a XYLD, as you can even see in the stock chart, it can be stressed over long periods of time, the underlying equity value. But something like this one, the NUSI, because they have the downside put protection, it puts a collar on the thing and basically can provide this predictable cash flow with the investor not having to worry so much. And so I think NUSI could have a place in a more conservative kind of cash management portfolio, if you will. All right, I want to move on to a few more options, and then I want to move in also to my cash management strategy portfolio allocation. So check it out on the screen right now. I had investors from the channel subscribers write in about a few more things, and basically what they were saying is, Ian, look at Omega Healthcare Investors, OHI. This is a REIT, a real estate investment trust. It's a triple net lease REIT that focuses on the healthcare space, on hospitals. I like what I saw. It's yielding 7%, and it's basically trading sideways, which is perfect for a cash management type portfolio. So what I'm basically looking at in the topic of this video and my last video. The main concern I had with this one, and I'd love to hear from the community, put it in the comments below, but it took a big tumble in 1999, and it's been rebuilding in share price since. Why is that? Why did it tank in 99? Please write in the comments if you know why. Another one was Annaly Capital Management, NLY. This one's been around forever. It's a mortgage REIT, and it's yielding 9%. The reason I cannot bring myself to buy this one is back in the day, I did a whole video on my investing mistakes, and one of my mistakes was investing in mortgage REITs early on, and I've never had good luck with mortgage REITs. It's just not a sector for me, so I will stay out of this one. And what I also don't like about this one, though, is the long-term equity is down over long periods of time. The value of the units of this mREIT are eroding in value. So this one I would cross off my personal list, but Omega, it's something that would be on my list if I could explain away what happened in 99. And obviously with Omega, I'd have a lot more research to do. Another one, this one came in from my friend Sam, I believe, who is an OG dividend investor, the Magellan Midstream Partners, MMP. This is a master limited partnership yielding 8%. This one looks really interesting. I would need to dig into this a lot more. It's a lot easier for me in a video like this to look at kind of systematic ETFs or exchange traded funds that follow more or less general rules and principles to operate what they're doing, covered call style ETFs for cash management. But a MLP, a master limited partnership, that's a business. So I would need to really dig into the details of the business just a little bit more. But this one, the Magellan partnership that was shared to me, I think from Sam, thank you, my friend, looks really interesting. They work on pipelines for distributing energy throughout the United States. And so that was really interesting. This one is on my list. I think it could be a good one for high yield. Although something like this might contain a little more volatility than a covered call ETF for certain. Let's keep going. Check it out right now. And so the last one is the global. Someone was writing in about the Global X Super Dividend ETF. Basically, I will write this one off and cross it off the list. This comes from Global X, which has some really cool funds. My favorite fund, again, is probably XYLD, the S&P 500 covered call ETF that I covered in the last video with a 9.2% yield, that is. And I really like that one. This one, honestly, kind of like QYLD, but a lot worse, is down over the long run in terms of the actual underlying equity. The net asset value per unit is actually trending down over long periods of time. And so for that reason, I would cross this one off my list. So that being said, out of this list here of other options, it's exciting to see that, quite frankly, two of them I'll keep looking at, and two of them I crossed off my list. And one of the reasons, honestly, I wanted to do these other options is I get people writing in about so many different investments. I don't have time to look at them all, and I know a lot of you want to understand my process. My process honestly has to involve just crossing stuff off the list that doesn't look right for me, like NLY, and that's how I go through it because I can't look at everything in so much detail. So sometimes I just try to get stuff off the list, but obviously anyone in NLY, I wish you guys all the best and huge, huge success. And so with all of that, let's get into some of these sample cash management portfolios. I want to really frame this, like, why am I doing this? Why am I going through these two videos in a row? The reason I'm doing it is to get to this. Check it out on the screen right now. And so basically my belief is that just how I manage my dividend stock portfolio, my cash portfolio should not just be sitting around in fiat currency. Certainly some of it needs to be for emergency purposes, but I need to be actively managing my cash portfolio for dividend yield, just like I manage my dividend portfolio. I own over 50 dividend stocks. I manage that for dividend yield and long-term yield on cost. I want to manage my cash portfolio the same. And so I have some sample portfolios here, all the way from $10,000 to $1 million. And you can see the portfolios get a little more complex as money gets added. Basically, in the $10,000 portfolio, I keep it real simple. I put half of it in fiat. I put half of it in stablecoins that I discussed in the last video. And I love stablecoins, by the way. I'll put in my description and pinned comment a link. I have another YouTube channel called PPC Ian Crypto where I talk about earning passive income in cryptocurrency. And stablecoins are pegged 1-to-1 with the US dollar. They're not FDIC insured, but they have real dollar reserves that are audited. And these stablecoins on platforms like Voyager and BlockFi are paying huge interest rates around 9%. BlockFi is 8.6, Voyager 9% or more. And I'll link also in the pinned comment if you want to sign up for either of those platforms, which I personally use and cover on my crypto channel. I'll show you how in the pinned comment. And with my links, you'll earn a bunch of free Bitcoin, and I'll be compensated as well. Forever grateful if you choose to use my links. Anyway, let's keep going. Check it out on the screen right now. In the base case, kind of simple $10,000 cash portfolio, I just do 50-50. And instead of earning 0%, which is basically what everyone's earning on traditional fiat currency, by earning 9% on half the portfolio, I'm just assuming that's in Voyager with no interest booster on USDC, now the yield is up at 4.5%. But it gets better. Let's say by hypothetically, the investor has $50,000 in the cash portfolio. Now I put 30% in fiat, which is $15,000, and I put $20,000 in stablecoins, or 40%. And then I put another 30% in the Global X, my favorite S&P 500 covered call ETF. I'm telling you guys, I probably will buy XYLD after going through all of this. I'm not going to do it soon, but sometime maybe in the well, maybe I will. Who knows? I might just go for it next week. We'll see. But XYLD is in the cards for me on my personal cash management strategy. But in this portfolio, by blending it all, it's important still to have some USD, some fiat, because emergencies come up and it could take some time to get money out of the stable coins or out of the ETF, sell the ETF, transfer it back to the bank account, all that stuff. So that's why I include some fiat. But this now portfolio has a blended yield of 6.4%, which is so much better than 0%. Let's keep going. On the $100,000 portfolio, I layer in the JP Morgan one. I really like that JEPI. I like it because it has capital appreciation. I like that it's actively managed. I actually do sometimes value active management. I'm an active manager, and I've done pretty well with my active management on my dividend stocks. And so with this one, I basically have a blended yield of 7.1%. You can see the bigger portfolio, the more yield I'm getting, because the more I'm just layering in, whereas on the smaller portfolios, the fiat is a bigger percentage of it all, and so that dilutes the returns. But it is important to obviously have some traditional bank account cash on hand. Now, the $1 million portfolio, I also layer in NUSI. And that gets the blended yield up to 7.8%. Now, what I would say is out of all of these covered call ETFs, these cash generating bond proxy style ETFs, they're using covered calls, and in some cases like NUSI using puts to create a collar and protect on downside, I looked at a bunch of them. My favorites are XYLD, JEPI, and NUSI. Not necessarily in that order. Maybe JEPI and NUSI, I could kind of flip-flop them depending on risk tolerance. But the $1 million portfolio is now yielding $77,000 a year in ordinary income versus zero, which would be coming from fiat. And honestly, in the $1 million portfolio, I still have $100,000 in fiat, which is earning nothing. And so that's 7.8%, even including a option in there that is earning nothing. And so what I want to do here is bring it home with a summary of why I'm doing what I'm doing here. So check it out on the screen right now. And so what I want to say is cash management. Let's just say the investor has 90% of their money in stocks, 10% in cash. And so the question is, should all of that cash, the 10%, be in fiat currency? Well, I can answer that with a question. Would the same investor ever put 10% in a single stock? Probably not. I wouldn't even put 10% of my money in a single stock. Well, maybe I would with good old Johnson & Johnson, but it's pretty rare. And so the thought here is, why not take cash, the 10% or whatever it is in someone's portfolio, actively manage it, get a higher blended return on cash via stable yet high yield investment vehicles. And so for me, This makes a lot of sense. I'm actually moving in that direction myself. Historically, cash has been cash. It's just been fiat. Now I'm doing stable coins, and pretty soon I'll be doing more. I'll be looking at XYLD for sure. And so basically, I'm just looking at cash now like a portfolio of dividend stocks. And what's exciting about looking at cash management like a portfolio of dividend stocks is it makes cash management more fun. It makes cash management for someone like myself who's getting older. I'm married with 2 kids. I want to have a little more cash, but it's never been exciting to have cash. In my younger days, I had no cash. I just put it all in dividend stocks. And there were times where I just went all in. I'm not at that stage in my life anymore. And that being said, I don't want to earn nothing on cash. I want to have those returns. And so that's why I'm doing what I'm doing in the video today. And so it's exciting. Now, one last point I want to leave you all with, and this is for the business people out there. If you work at a company, you own a company, you are at a company that has to have a balance sheet, has to have financial reserves. One of the things that may make sense is to take some of these types of strategies into business as well, because I'm just saying the value of the dollar, the value of cash, it's eroding pretty quickly. And so I would say for individuals, but also for businesses, having a solid cash management strategy makes all the sense in the world, in my humble opinion. Everyone, if you enjoyed the video today, please go ahead and smash the like button. It really does mean the world to me because it helps the video reach more people on YouTube. I put a lot of work into these videos. Also, please don't forget to subscribe. Also, if you want to really dig into the numbers a bit more, the spreadsheet today will be shared on Patreon with my patrons at the Thug Life Investor level. That's the $10 a month level. And if you join Patreon, I have 2 levels. I have a $3 level, a $10 level. Both have a ton of benefits. I'll link to it in the pinned comment below. Check it out. You can try it out. You don't like it, cancel at any time. But I have over 30 videos on there for all of my patrons, and I add new videos all the time. Almost every week. I have blog posts on there that patrons can see. Patrons ask me questions, and I comment on there all the time. And again, at the Thug Life level, the more expensive level, I share all of my investment analyses like in the one from the video today. And so check out Patreon. I think you all will really enjoy it if you want even more of what you're seeing here on YouTube. All right, everyone, in terms of a full disclosure, I am an affiliate of Voyager and BlockFi. Also, in terms of full disclosure, I am long Johnson & Johnson, ticker JNJ. I am long US dollar coin, USDC, and Gemini US dollar coin, GUSD. Also, I'm likely to take a position in XYLD at some point, and probably some of these other ones as well as I get more active in my cash management. But I also don't want to layer them in too quickly, so I'm going to take my time on those avenues. Also, in terms of a friendly disclaimer, today's video is not investment advice. I'm not a licensed investment advisor. Today's video is just for your fun and entertainment. If you're going to go out and invest in the stock market or anywhere else, please consult your licensed investment advisor first. I'm just sharing my journey here on YouTube for fun and entertainment. It's possible to lose a ton of money in the stock market, in these ETFs. Really doing anything these days with money, it's possible to lose money. So proceed with caution and consult your licensed professional. Also, today's video is not tax advice. I'm not a licensed tax advisor. All right, everyone. I hope you enjoyed the video, and I'll see you in the comments below, and I'll see you in the next dividend investing video.